The Central Bank of Nigeria has released a circular to address issues of foreign exchange, within the banking sector, where it suspected cases of excessive foreign currency speculation and hoarding from Nigerian banks. And the new circular introduces a new set of guidelines aimed at reducing the risk associated with these practices. And joining me now to discuss this development with the CBN and its impact on commercial banks across the nation is an economic analyst, Nwachukwu. Thank you, Mr. Stephen. Thank you for joining us on Business Daily.
Always my pleasure. Thanks for having me once again.
Indeed. Okay, starting off, we have seen quite a number of introductions by the CBN. And like the new CBN governor had said, in the person of Chiamaka, he had talked about, the CBN going back to its traditional duties. And we've seen a lot of reforms come from that end. And the newest is, of course, the circular we did see released yesterday. But what do you make of this development?
Well, it's in the routine activities of the Central Bank of Nigeria to issue such circulars and directives, which serves as guidelines, like they call it, the prudential guidelines, to make sure that the banking sector is well regulated, and also to make sure that we have some level, or if actually you call it sane stability of the commercial bank. All these circulars and memos, or what you may call it, policies of the CBN are meant to have some level of stability of the financial sector. Have in mind that the circular in question now is not like it's a new thing. It has been in existence. It's just like reawakening the consciousness of the commercial bank that yes, that this is an existing memo, existing guideline that you have to keep. But the question is, should have CBN long ago done this in kind of on a routine? Yes, the last time they issued that circular was in 2015 when they reminded the commercial bank that they still need to remain within the threshold of the 20% in excess of what they have as 20% of their shareholders' fund. So I think people will read meaning to it. You can look at it from two perspectives, one from the man on the street, and the other aspect of it, you can look at it from the administrative or an economic point of view. If you look at it from that point of a man in the street, you will say, yes, CBN is somehow is choke. They are looking for dollar everywhere. And if you listen a couple of days ago, less than 2 weeks, we listened to the Minister of Finance and coordinating Minister of the Economy, where he alluded to the fact, yes, that they have to look internally to source for this forest they've been running around the whole globe to look for. That there is a lot of forests being warehoused by the commercial bank. So 2 weeks or 1 week later, CBN comes up with this very circular again, reminding the bank that you don't have to exceed that 20% threshold. So it seems like from the street point of view, is that CBN and the federal government is aggressive. They are looking for dollar everywhere to see if they can pump this very forest to the forest market to cushion the rising cost or the rising rates at the parallel market, both at the official CBN window and the parallel market. Okay, is it the best? Then from the administrative point of view, well, CBN will tell you, yes, what we did is something in our routine to make sure that we put out the guidelines and remind the commercial banks that certain percentage you should not pass this threshold while you are acquiring foreign assets in form of hard and currencies. Have in mind that in the routine activities of the commercial banks, they earn dollars. Most of the transaction as an importer, as a trader, as whatever, you do some transaction with the banks. They help you conduct those transactions and charge you in the same hard currency. So most of these returns have been accumulating over a period of time. Take, for instance, an institution or commercial bank like Zenith Bank has more than a 1.7 trillion shareholders' funds. So what CBN is simply saying is that, yes, we know you are growing your shareholders' fund, which are most often the retained earnings and investment that shareholders are put in those institutions. You cannot continue to acquire foreign assets in dollar terms or in foreign currency terms to the threshold of your 20%. So as against the 1.7 trillion, you cannot earn more than 20% or retain such in hard currency. So the question is it healthy now that the banks and every other institutions are looking for dollars at least to supply within the system. One will say it's still money within the system and it will still circulate around the system. But it's just a question of the short notice CBN gave them today, being February 1st, to make sure they comply with that very regulation. So that is weird. But it's expected if all of them comply, it simply means there will be enough dollar. A couple of $1 to $2 or $5 billion will be available for manufacturers, for industry players, so that they can reduce this crazy run you are having in the power market above 1,500 for 1
naira. We'll go
naira.
to the implications of this and the net open position, the threshold, like you've pointed out. But let's talk on the speculation that the CBN did point out. Because one thing the CBN said was, of course, we know that speculation involves the buying and selling of foreign currency. And the CBN seemed to be indirectly accusing the commercial banks of, profiting from the fluctuations that have been witnessed in the currency market recently. Do you also agree with that sentiment from the CBN?
It's unfortunately that CBN is going the wrong way. If CBN will look at this as the reason why they are putting up this policy or reminding the banks, it's quite wrong of CBN. Have in mind that a couple of banks in the last 2, 3, 4 years have gone to the market, international market, to raise euro bonds. Fidelity did and got around $400 million. First Bank did and got about around $500 million. Zenith did, Access Bank, GT, all of them have gone to the euro market and got this very euro bond.
Sourcing for dollars for themselves.
Sourcing for dollars, so for their businesses. So if they have within their purview this very dollar and you cannot provide for these manufacturers and they have it, why not trade with it? But the question is the margin of trade. I know there is a standing CBN rules that within the official window, but now we don't have official window. What we have now is a willing buyer and willing seller, which is a flotation regime, whereby there is no peg. If actually you are having a peg and a window, that you will say, okay, don't go above 2.5%. I think that's the regulation around the CBN. You don't sell above the 2.5% for the BDCs and other sources. So, like I said, CBN is taking it the wrong way. Like I said earlier, the activities of this very commercial bank still revolves around receiving earnings from these very sources. I said when you do your money transfers, you receive, as like we do, the diasporas are sending monies to home. The banks has a percentage of the commissions, like Western Union money, MoneyGrams, and all those facilitators. They have a portion of same earnings from such. So on daily basis, the banks earn it. So if you have left your duty to make sure you source enough resources or enough dollar to accommodate or take care of the rising demand of the forex market in the both in the official window and other sources, that on daily basis manufacturers, industry players are looking for dollar. And now you are resorting to what the banks must have accumulated over the years. But I would be rather more concerned than willing to listen to CBN if they are looking at it from the exposures of the bank. Like I said earlier, it's within the purviews of the Central Bank of Nigeria to dish out these regulations because it is their duty. They need some level of financial stability of the banks. So I know for sure there is a report that came out, I think around August or September last year, where we have Augustus and Co. Release a report of the exposures of some of our commercial banks in the failed default of the Ghanaian government in repayment of most of this. So a lot of exposures of commercial banks to the tune of over $600 million. So this is where I concerned about the CBN regulation. Yes, you have to put up such so that whatever be the impairments provided by this commercial bank over these very loans, in particular the ones that the Ghanaian government is owing some of the Nigerian commercial bank who have participated in most of the euro bonds of the Ghanaian government. A couple of them, both directly and indirectly, a good number of Nigerian commercial banks has invested a lot in that. And now Ghanaian government cannot be able to pay. And the stake we have is close to $600 million. Yet CBN is trying to awaken the spirit of this very commercial bank. Listen, if you have made an impairment or provision in your books or your balance sheet to cover this very level of your exposure. We also are concerned that you don't get more exposed again. But have in mind, like I said earlier, the point is not just the exposure of the bank. The point is that the CBN is looking for dollar from unorthodox measure, meaning that they are looking, if they want to strangulate the banks to release whatever dollars within their custody. I said earlier, 2-3 weeks ago or 1 week ago, the Minister of Finance alluded to this, that they should look, they are looking inwards. There's a lot of dollars around. So now it's more like bringing policy of the government to strangulate the commercial bank to release whatever is in their custody.
Well, in the favor of the CBN, that is their responsibility.
Oh,
you know, the regulatory responsibility that comes with the CBN. They are the banker's bank anyway.
Of course they are. Like I said, it shouldn't come in a harsh manner. You cannot take away the fact that people will prefer to hold some of their assets in foreign hard currencies. People will prefer to hold because there is no level of stability of naira. People are more conscious to hold in other currencies. So the question is not just putting up the policy to, you know, get these very dollars around these commercial banks. The question is to stabilize the strength, the purchasing power of naira, so that these banks will prefer to keep their retained earnings in naira than in dollars.
Well, let's hope that we indeed, you know, see this policy, you know, have impacts, a strong impact on the naira, like you said, strengthen the local currency. But let's talk about other, you know, content of that circular, because you have touched on the NOP, that is the management of the net open position. You've touched on the threshold that the CBN had, you know, issued. But the CBN also talked about calculating the NOP, which the CBN said must be done using the gross aggregate method, and other things in regards to that, which he also talked about the other requirements that were outlined, which are, you know, including the hedging of borrowing and lending in the same currency to avoid currency mismatch and risk.
That's very important.
Yes, we need to speak on that. What are your thoughts on that, you know, lending and borrowing in the same currency?
Yes, it's part of the regulation of the CBN to make sure that you don't have conflicting reporting, in the sense that you hold in pounds, you hold in dollar, you hold in euro, and you hold in Japanese yen, then you start trading among those very currencies or swapping it in form of the hedge, pulling them together. That's what it means, the hedge fund. So you should trade. If you have dollar, trade against dollar. If you have pounds, trade against dollar. So whatever you're reporting in your book should reflect in your balance sheet that dollar, every transaction is against a particular currency. Don't say I have Japanese yen, which is a hard currency, so I can use it to make any commitment or any lending in form of dollar. So that's what CBN is trying to guide them. Whatever you receive, if it's in pounds, do your transaction and reflect on that within the pounds. If it's in dollar, reflect in that. Don't hedge them. Don't put them together so that you don't get confused. Or when a particular currency falls, it affects your investment because you have already hedged it against other currencies. So trade against each particular currency. That's a very important aspect of that memo too. Then you talked about the reporting. The reporting is normal. Make a daily reporting or monthly reporting in respect of your balance or what you have on daily basis. That's what CBN is demanding from you, so that CBN will have an overview of what is available within the purview or within the books of the commercial banks on daily or monthly basis. So it's important too. It has been in existence. But the point is, like I said, I would prefer to go from the point of the street views, which is CBN and federal government is choke. Dollar is rising and naira is falling on daily basis. And some of these commercial banks has a lot of money warehouse, and they are trading with it. That's if I have to defend the commercial bank, they will tell you we are trading with it. We did not just warehouse it. We are trading. We are also helping you. But what CBN wanted to do is, rather than maybe giving it out to Malams or giving it out to BD6 to trade, why don't you come within the purviews of the CBN and make this transaction? Have in mind that a good number of transactions that importers conduct with banks, they don't need to go to CBN. Ordinarily, your Form M should be your source or your mandate to receive dollar from CBN. But these banks, because they are liquid enough, can finance your project in dollar terms, in hard currency terms, without referring to CBN. So the banks within their purview, they have a good, reasonable amount of foreign hard-earned currencies as a result of the cost of their business they have earned over time, or they may have converted, because they can also have to decide to say, I want to buy some assets in US dollar and convert their naira to dollar. So the question is, CBN should be mindful of its genuine intention to stabilize the banking system than throwing panic.
Okay, Mr. Steve, quickly, our time is fast spent, unfortunately. But before we go, this month we do expect for the first Monetary Policy Committee meeting by the CBN, the first for at least the current administration. What are your expectations from that meeting, especially in the area of foreign exchange and, you know, strengthening the naira in this time?
Well, like I do often say, that CBN has little or nothing to do to generate forex. Rather, they may have one or two policies that may encourage diaspora remittances inflows. Maybe some level of whatever policies that can encourage these, our young chaps, our brothers, our sisters, our dads who works in UK, in London, in New York, everywhere, so that they can bring, because we have a couple of billions of dollars stashed out there that they legitimately earn, to bring it in. That's only what I think CBN can do. But in respect to the monetary policies and the rest of them, currently the MPR is around 18.75%. With CBN hold, yes, that's the expectation, but the pressure is on CBN to lift it up, maybe by maximum of 100 basis points, 75, 50 to 25 basis points. But I expect CBN at maximum, if you have to, no matter the pressure of the inflation hitting around close to 30%, 29.79%, CBN should try as much as possible. As much as you are trying to chase or reduce, you have a target of 21.4 target for inflation rate for 2024. You should not, because most times, all this while you have been lifting the MPR from somewhere around 11.5% to 18.75%, the inflation have moved from somewhere around 17% to a current 29%. So lifting the MPR is more so you're also exposing the banks. The level of default will continue, because the more you have a higher interest rate, the more the level or the degree of default increases. So CBN should be mindful of that financial stability of the commercial banks.
We'll be on the lookout for the decisions that will be met at that meeting. Stephen Nwachukwu, Economic Analyst, giving us, you know, insight into the recently released circular from the CBN on banks and how banks should handle, you know, foreign exchange and all of those related to that. Thank you, Steve Nwachukwu, for joining us on the program this morning.
Always my pleasure. Thanks for having me.
And this is the point where we wrap up today's edition of the program. Join us again, same time, same station tomorrow, and join the conversation on social media. And let us hear your thoughts on the recently released guidelines from the CBN. My name is Chiamaka Enendu. Thank you for watching, and bye for now.